Welcome. Thank you everybody for joining us. Quite honestly, when I said I'd record this, I was like, okay, I'll record it. You know what? Let's let people listen in too, thinking we'll get about 3 people. And thank God we have a very big crowd. So clearly there's a willingness to learn. People are excited to know about new things and enjoy. Please ask questions. Try and cover everything. I will leave time for questions at the end, but also if you have questions during, use the chat box and ask me, and we'll try and cover everything. I want this to be very clear, so you leave here with some more knowledge and understanding of what this is. So first of all, this talk is not only for Americans. I know I posted like, what can Americans invest in? The idea was that last year, if you're on the Facebook group, you'll have seen that a lot of Americans were asking, what can I invest in? I posted a lot about Kupot Gemel Lehashkaah, which can be a very nice investment. But then Americans went to invest in it and they were told, actually, you shouldn't invest in it. Kupot Gemel Lehashkaah, mutual funds, things like that. Americans were being told that they can't actually invest or shouldn't invest in these things for American tax reasons. The Israelis don't mind if they invest in it, but for American tax reasons, there was a problem. So I took it upon myself to go and find some products, some investments, some things that Americans can do in Israel, because it seemed like their options were almost like leave your money in the bank and get 0.0 something, move your money to the US, which is not very attractive, or buy individual stocks, which is suitable for some people, but not for everyone. And when I went out to find things, I found one of my findings was if you have a lot of money, if you have millions, there's plenty of options for you. There's plenty of, money managers that will manage huge sums of money. But for people who don't have millions and just want to invest starting from small sums or just want to put money on the side for something, there weren't that many options. And that's where I came across lending platforms. And before we get started with what exactly lending platforms are, a couple of disclaimers. This is not investment advice. This does not require a license for investment advice. These are suggestions. This is an introduction and knowledge into what I consider a reasonable investment, and quite honestly, something I personally have invested in. And I also, the company that I'm going to share that I work with, there is an affiliate link at the end of the video. So if you choose to use that, it's there. And now we can get started. And what is a lending platform? So the idea is that the world with all our apps and our smartphones and everything has moved more to digital and a lot to social. Okay, there's a lot of social things happening. One of the social things that are happening is something like Airbnb or like Uber, where people are using other people and moving from the traditional ways things were done, and we're doing it outside of where it used to be done. So, and it's being done via platforms that the internet, on the internet. Let's just say something like Amazon. So that is a platform where people can buy and sell. eBay, similar. Uber or Airbnb is a platform where people can offer their houses, and people that are looking for homes can rent homes. So the idea with this is that we're taking loans from the bank, generally, right? Loans are taken about 90%. About 90% of loans, of debt taken in this country is taken from the bank. So we're taking loans from the bank, and the idea of lending platforms is actually to take this away from the bank. The same way that Uber and AliExpress, the same way that these platforms change the way things work, the idea is if I borrow money, why do I need to go to the bank, where the bank will lend me money maybe at 8%, 10% if I'm a business, maybe hopefully less if I'm an individual. And then when I go and give them money, let's say I want to put in a weekly picadon or something at the bank, I want to do a weekly CD or something at the bank, they're giving me 0.00. Like they're not giving me much money. So the bank's making that difference. And the concept here was, what if the people make that difference? What if I lend you money, you borrow money from me at some sort of middle rate, and then we both make more money? I don't make the 0.01 pathetic percent that the bank's giving, which is partially due to interest rates being so low right now. And you don't need to borrow at as high a rate. That is the concept of peer-to-peer lending. It's disrupting the traditional bank setup. Okay, it's more social capital. Now, just some things about Israeli peer-to-peer lending. They are, as of about a year ago, a little bit more than a year ago, they're under the auspices of the Israeli, it says Securities Authority there. It's actually not the Securities Authority. It's the Reshut L'Shuk HaHon. So they're regulated. They never used to be regulated. So this is a new thing. You're not just, if you were to go for a platform, just randomly handing people your money. It's underneath, it's regulated. It's under something, okay? So that's the first thing before even going in any further. The second thing that's important to know is you're lending money to Jews. So for anyone who this matters to, there is a heter iska on this. And the third thing that's important to know with these things is you could start from really small sums. And that's when I said I was looking for things. There's a lot out there if you've got $1 million and up. But when you're looking, and many people are looking for small, to invest small sums, there wasn't that much out there for Americans. So one of the advantages of something like this is it doesn't need to be a large sum of money. It can be a very small sum of money. You can start from something very low, try it out, or maybe you just have, 2,000 shekel to start with. It's enough of a sum to get started with. And these were important things when I was looking for something, to tell people about and to find solutions for them. So the idea, as I said, is that of 90% of loans of Israel are taken from the banks. There apparently is a shortage of ways that businesses can take money, meaning there's really only the banks. There aren't that many other options for businesses to take money. And it's been a known fact that there's a shortage of resources for Israelis to take money, Israeli businesses to take money. Now, if I'm short of money, okay, and I'm short of money, or I want to buy a car or something and I need money, I can borrow money from the bank. I'm a good bank customer. I could borrow money at 3%. So if I go to a lending platform and borrow at 6%, chances are you don't want to lend me money because I'm not an amazing customer. So what I want to share here is that lending to individuals can be risky. Thought is that if I want to lend money to somebody, it's risky and I'm scared. So what I want to do is look at lending platforms, and a specific lending platform where they lend to businesses. Now, the idea of lending to a business is that the business is going to have certain resources to pay back, whereas frequently individuals that are lending at 6% or whatever, it's a little more scary, okay? So I'm looking at investing money. Now, the reason we want to invest money generally is because we want to have more money. We want our money to grow for us. And there's always that balance that we need to find between, how much risk we want to take and how much return we're expecting. So if I go to the bank and I leave my money in a bank savings, I'll get that 0.01% we mentioned before. I know that it's risk-free. So I could say, okay, I'm going to put some of my money risk-free, but maybe I have money other than that, or maybe I have some money that I'm willing to let grow and take some level of risk with. So what does this lending platform offer you? The lending platform offers as follows. People that want to borrow money come to the platform, but I'm going to specifically talk about businesses that want to borrow money. So a business that wants to borrow money comes to the platform. Now, the platform doesn't want to let me lend money to people, to businesses, unless they've checked it out. So what the platform does is they check out the business very, very well. They put a lot of different things into place to make sure that the chances of the business owner returning the money is as high as possible. So here are some of the things they do. First of all, they make sure that any business that's getting money has been around at least 2 years with 2 full years of tax reports to the Israeli government. They check out the business plan to make sure the business plan looks reasonable. Now, the money is lent for the business plan. They can officially use the money for other things, but it's based on a real business that has 2 years of statements and has a business plan. The next thing they do is check the owner of the business. Is this somebody who bounces checks and sues people and closes businesses down owing people money? Or is this the sort of person who pays back, who is going to pay back? It's a personality type. So they check out the person. They make the owner of the business sign a personal guarantee on whatever money they're borrowing. And in addition, they have another guarantor who will sign on the loan. So those are a couple of the things that they put into place in order for us to feel more secure to hand the money over. Another thing they do to make us feel more secure handing our money over. So we have the 2 years, we have the upstanding people, we have the 2 guarantors. Another thing they do is they take 1% of whatever money you put in and put it into a fund. This fund, you do not get the 1% back, but this fund pays out if a business is having trouble paying. So what happens is this lending platform has maybe 800 loans, okay? I go in with 10,000 shekel. My money gets divided up in tiny increments, tiny increments to these 800 companies. These companies are paying a certain interest rate. I get the interest rate that they're paying, meaning if it was decided that a specific company should be paying 6.5% interest, then on the 2 shekel I lent them, they're paying me back the 6.5 interest. I do not know which company it is. This is all blind. It's blind because the Reshut Shuk Hahon says it has to be blind. So I don't know which company it is. I just know that it's well checked out, that they've signed, 2 guarantors are signed. These are hopefully upstanding people that will not bounce the repayments, and that the business has been around for a while and the business plan has been checked properly by professionals. Okay, that's what I know. Then my 10,000 shekel goes in to hundreds of loans, but in tiny increments. And every month, these loans are paid off by the business in what's called spitzer, which means you pay off every month. Your mortgage is probably also spitzer. If you've taken a loan from the bank, chances are it's spitzer. You pay off 100 shekel of the loan a month plus a shekel of interest, whatever it is. You're paying off both the loan and the interest every month. And that's what you're getting as an investor. What you could either get back or could be reinvested. I'll make that clear and I'll repeat that. So what's happening is I'm lending 10,000 shekel. It's getting divided up among hundreds of loans. So I'm giving everyone a shekel or a few shekel. Okay, it's never going to be more than 3% of my total portfolio, which in my case of our example is 10,000 shekel. And it's going to go to all these loans. Now, the company also doesn't know who I am. It's the platform. So it gives back, let's just say, 5,000 shekel repayment of loan. And that 5,000 shekel, the platform divides into all the hundreds of investors who've all given a couple of shekel. Okay? And then everyone gets their a little bit of the loan back, a little bit of the principal, and a little bit of interest. And then they have a choice. They can either reinvest the principal and the interest, or they can pull it out. Hypothetically, if you have a large sum, not a 10,000 shekel that we're discussing, but if you have a larger sum to invest, you could in theory get the interest or some of the principal, but let's just say you want to reinvest the principal. You can in theory get the interest every month into your bank account. Obviously not worth doing on 10,000 shekel, but if you put in 500,000 shekel, you're already getting a few thousand shekel a month. So it could be passive income for you. So we've gone in 10,000 shekel, we've divided it among many loans. Okay, we've lost 1% the second we go in. Now what that meant was that as soon as you go in, you see you lose 1%. That has gone into a fund that pays out if somebody defaults. First of all, you're not going to go in for 2 months because you go in, you lose 1%, you haven't made 1% profit yet. So you're not going to go into something like this for 2 months, but you may go in, you may in theory pull your money at any time. I'm just telling you on a personal note that it doesn't make sense to go in only for 2 months. What we want to do is go in for longer than a few months because there's this 1% fund. The 1% fund pays out anything that defaults. Now, default does not mean that the business is never paying back. Default could mean that right now they can't pay this month's payment. Maybe they're sitting with the company and renegotiating that the loan, instead of being 4 years, which is the standard loan time, 4 to 6 years, will be 8 years so that it's easier for them to pay it. Meantime, you would still get your payout because it would be from the 1% fund. So as long as less than 1% of loans default, you will still get your payout. And so far, yes, they've definitely had less than 1% default rate. As far as I understand, the banks have less than 1% default rate also. And here things are being checked out even better. So we'd hope to have less than 1% default rate. What are the interest rates? Like, why would we do this? One of the things that are most important to us is if we're giving up on our money and we want to make money, we want to know how much we can. As I said, it goes direct. okay? It goes directly. So if you're a business and you're borrowing money at 6.5%, and I lend money, I will get 6.5%. It'll be you against me. I don't know who you are. You don't know who I am, but the platform will sort it out that whatever rate they decided you were going to pay for interest, that's the rate you're going to pay me. And then, so basically what's happening is, on average, the rates are, it says on their website between 5 and 8%. On average, and all the websites for these companies, or for companies in Israel that do this, will say approximately what rate you can expect. So we're averaging about 6.8%. That can vary slightly. If interest rates go up, the new loans that you'll go into will be at a higher interest rate. Some of the loans are fixed interest, and some of them are prime plus whatever percentage, prime being the interbank rate. And if that goes up, we're not expecting interest rates to go down at this point, but if that goes up, then the loan rate goes up, meaning the percent you're getting goes up too. Okay, so you're getting about 6.8%, but what happens is you're going to lose 1% immediately going in. Now, most loans are 4 to 6 years. So if you're staying in for a few years, we probably divide that 1% over the 4 years and say, okay, this was a once off for the 4 years or 6 years or 5 years we can average it at, so it's 0.2 per year. In addition to that, you're going to pay 0.5% management fee. You pay little amalot, few fees, banking fees, because you're going into an account there. So you have management fee of 0.5%. You have the 1% that you lost. And the other fee you're going to have, not a fee, is tax. This is taxed at 15% because it's a loan. So the same way when you put money in a bank picadon and a bank CD, you'll pay 15% and not 25%, which is capital gains tax in Israel. This is the same because it's essentially lending money. And when we lend money, we pay 15% tax. Now, what about Americans? Why is this okay for Americans? So I'm not a tax advisor. My understanding for American CPAs is it shouldn't be a problem. It's not a PFIC issue. It's not a fund per se. It's just lending money. But if anyone decides to do this, you should ask your CPA. Just clear it with them first, because obviously that, we want to make sure that this is okay for Americans. But I've heard from, as I said, 4 CPAs and many clients who have invested that it is okay for Americans. So I just want to sort of look over some of the risks and some of the benefits. In the company I work with now, which is called BTB, in that company specifically, here, if you take a look at their website, you can see that this is the lending platform of the platforms I did research that I felt was the smartest, the best, whatever. I felt this was the best because it's lending to businesses. And you can see here, first of all, how much they've lent to, what they're doing. And this is the English site. Get a loan, invest, frequently asked questions. So the answer here is something about Americans, actually. Whatever, you can take a look at this later. I wanted to say the downsides, the risks. So first of all, this company, you can't control what you buy. In some of the others, you can look at the different loans and decide, this is a loan I want to go for, this is not a loan I want to go for. In this company specifically, you can't. You buy into their entire portfolio, and they're coming and saying, we've got a good portfolio. So you go in, you don't decide 1 loan, 2 loans, you're going into their few hundred loans at once. And you don't have the decision of what I want this one and I want that one. So basically what happens is every lender is making the same sum of money. There isn't like, oh, I made a smarter choice or a less smart choice. You're basically going into everything. Let's look at the downside, okay? The downside of investing like this, you're making 6.8%, you can't make more. Stock market has a great year, you could make 10%, you could make 15, but it has a bad year, you could lose 10 or lose 15. Here, you're making 6.8%, it's set. You lose 1% going in, okay? And that's lost. You will never get that back. So we want to know if we're going in, while you can do short term, I wouldn't do only a couple of months because it'll take you a couple of months to make that 1%. The 6.8% that you're going to make, just back because I see I have a question about this, it is dependent on interest rates. As I said, some interest rates that they're giving are prime plus something. So if prime rate goes, if Bank of Israel goes up, it puts up the interest rates, prime rates go up, and therefore you'll get a little bit more. And then any new loans that they're giving will be at a higher interest rate. You'll reinvest, and that money will get a higher interest rate. So yes, the interest rate can change. Right now, while interest rates are extremely low, we're not worried about that. If the opposite were to happen and rates were really high, we'd be scared of them coming down. But right now they're low, they're going up. Okay, one of the other things, downside, I guess, is that it's blind and that you're buying the entire portfolio, which is not a bad thing, because now I'm going to talk about the upsides. The upsides are you're making 6.8% potentially. You're expected to make 6.8%, and that 6.8%, you could put it in and leave it. You don't need to be proactive. The second benefit upside of this kind of investment is that it's only taxed at 15%. The third is that you can start on very small sums of money. You can invest as little as 2,000 shekel. Another benefit is you could do a horat keva, a monthly savings plan. Once you've opened it with a 2,000 shekel for 500 shekel a month, or some not too huge sum where you could save. When I worked at a bank many years ago, and Americans at the time were allowed to buy mutual funds, we used to set up that they'd save a few hundred shekel a month in a mutual fund, and that was their savings plan. That has changed, and there aren't many things where you could save on a monthly basis that Americans are allowed. If you're not American, this is all allowed, no problem. So this is one of the attractive things about it, is there's sort of a passive savings element where you could set up a monthly horat keva, where you could be saving every month and don't need to do anything else, and you'd set it up. Another benefit of this platform is that it's all in English, unlike the website of the banks, where when you look at your English, you're very confused because a lot of stuff isn't there, which is why I wrote Smarter Israeli Banking. Like, it's not clear to English speakers. The English bank account, the English website of the banks is not always clear. And on this, the English website is very clear, so that's another benefit. The other benefit is potentially passive income. And if you put in enough money into this, you could get passive income. You could ask for the payment of the interest. So we're saying about 6.8, which after taxes and fees is going to average around 5.4%. You could get that 5.4% put in your bank every month and create passive income for yourself, which I know people are always looking for. And I just want to make some side notes of different things one should know when they're going into lending platforms. One is that in theory, you can get out when you want. Okay, you can stay for the length of the loans. You can reinvest constantly. If you want to get out of the loans, you can, as long as someone else is buying them. Okay, as long as other people are buying, you can get out. That's one condition. And the second condition is you'll only get out of them with getting 100% of your money back if they haven't defaulted. So let's say you do 300 loans and 2 of them default. You want to sell out, you need your money. You'll get the money from the 298 of them within, let's say, 2 weeks. The other 2 you could either sell at a discount at 80%, 80 agarot on the shekel, because they've defaulted. Doesn't mean they won't pay, it just means maybe they've extended the amount of time the loan is. Or you could just leave it till the end, and assuming they're paying, you'll still get the money. So you can get out under normal circumstances. There's a lot of money going into these things every month. So under normal circumstances, you can get out, though I am pointing out you're not going to do this for a month or 2 because you're losing the 1%. And if you leave it long term and you're getting, the 5.4%, let's say after tax, and it gets reinvested, you have more money being reinvested constantly. You can really build up a nice sum of savings. That is why I like lending platforms. I think that it can be a nice investment for Americans and non-Americans who are looking for something different that does not have a correlation with their Keren Ishtalmut, Kupot Gemel, Keren Pensia, and anything else on the Israeli stock market. It's something different. Doesn't have ups and downs the way the market has. It's only taxed at 15%. You can get in on a small amount, and you don't, because you're not choosing the loans or anything, you just need to sign up. You don't need to decide what investments or have a, incredible understanding like you would want to have of stocks before you go into them, because the company has chosen for you. Okay, that sums up most of what I wanted to say. I'm going to look at the questions now, and then I'm going to take more questions. If you want to reinvest, yes, any money going in to be invested will be charged the 1%. Okay, the next question I see here is, what's the minimum age for opening an account? So the minimum age for opening an account is 18 in Israel. If you do want to open an account for your kids, one of the benefits here is you could open it. Let's say I open it for my kids, and I want, some of the money is mine. Let's say 10,000 shekels mine, and my daughter wants 2,000 shekel. I can have a sub account within my account that I can name my daughter's name. So we'll say Ayala. I will name the account Ayala, and I will put 2,000 shekel, and that 2,000 shekel will grow on its own. And when she's 18, I would transfer whatever it is. Answered. Okay. Yes, someone's asking if the platform decides for each borrower what the rate is. So first of all, yes. If you're slightly higher risk, they're going to take a slightly higher amount. If you're very high risk and you should be paying, 14%, they're not going to lend you money. They're only lending money to people they truly believe can return it. So they're lending it between 5 and 8%. But they are deciding risk level, if they can put down, whatever it is, if they can put down money, whatever it is, that they're deciding what risk level they think it is, and they will make the interest rate slightly different for different companies. And then the platform, as I said, takes 0.5% from you and takes a percentage from the companies borrowing the money. The management fee, is it once off per year? No, they take it in small increments every month. How quickly can you get your money back when you need it? So I pretty much answered that. It's assuming there's no defaults. It's normally within a couple of weeks. That's how fast you'd get your money back. If you put in any money that goes in, you're going to pay 1% on. So it doesn't matter if you put in 10,000 shekel and then 300 shekel every month, or you put in 13,000 in one shot. Every shekel that you put in, you pay 1% into this fund. And it makes sense. Because that way, if something defaults, instead of being, defaulted, you get paid out. So far, they've paid 100% of the loans back. If capital gains is being taxed higher than interest income, yes, absolutely. Capital gains in Israel is taxed at 25%. Interest income is taxed at 15%, and this is taxed at 15%, as I said. Regarding volatility versus the stock market, that's something I don't know if I can assess for other people, meaning there's clearly a lot less volatility. You also see less volatility. There isn't reactions like you see in the stock market. Oh, it's dropping 1% today, it's up 1% today. It's like, okay, did the company pay back? If not, they're on a path to some sort of payment plan, maybe longer, or they've defaulted in some way, or everything's going smoothly and they're paying back. You don't know what's going on behind the scenes in the company, what they needed to do to pay back. Assuming everything's going well, is just a loan and it's being paid back. I don't know if I can really put into numbers what the difference is between the stock market. On the one hand, you're getting a set rate. On the other hand, you can't get higher than the set rate unless interest rates go up. I would say that the chances of not being paid back are that, you're lending to hundreds of companies. So the chances of hundreds of companies not able to be paid back is very, 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 very unlikely scenario. But if a couple of them can't pay back, well, that's why you have the fund, meaning we're not going in thinking you'll lose huge percentages of money here. I wouldn't be giving this webinar if I thought you were. You're going in with, okay, this is the risk level, and there's this fund, and they've got things in place, and maybe there will be a company that can't pay, or 2 companies or 4 companies, but the thought of there being like 600 companies that can't pay is a very unlikely scenario. And if it were to happen, there'd be a lot worse things happening in the country. Right? It would be worse catastrophe than 2008. It really, really, really would be something terrible. But yeah, I suppose you need to take into account that we're still relying on companies to pay back loans. Okay, if you decide to not withdraw passive income or to withdraw passive income. So if you decide to withdraw the income, you'll be withdrawing the 6.8%, which I'm telling you is working out about 5.4% after fees and taxes. If you decide to withdraw that, it would withdraw to your bank account. Now, the way the system on this platform is set up is that you've confirm when you sign up, you've confirmed your bank account, and you can only pull money out to that bank account. So even if someone got your login, they need to go change and sign, whatever, you can only pull money out to that bank account that you set up with. So it would go straight to the account. If it gets reinvested, yes, you could lose the 1% of what goes in, and it gets reinvested. Okay, I'm being asked if the other Israeli platforms are like BTB where you can't choose between the loans, and the answer is no. And the other platforms, you can choose between the loans. Okay, if I had enough funds for a Kupot Gemel Lehashkaah, I think is the question, or this, what would I choose? Well, first of all, if you're American, you don't have the choice. If you're not American, Kupot Gemel Lehashkaah is not being taxed at all and can do better than 6.8%. But you're only allowed 70,000 shekel there. So depending how much money you have, that might be where you would check first. Can I recommend what peer-to-peer platforms? So when I looked, as I said, there are 4. The one that I chose and now work with, and I'm now would like to bring out to the English-speaking world is the BTB. And the reason it's BTB is they're the only one that lends money to businesses. And I felt that I could go to the bank. I mean, I know this for a fact. I go to the bank, I could ask for a loan and get a loan 3.5%. Okay, I took a car loan. I think it's even less than 3.5%. I can get a loan at 3.5%. So if I'm a good lender, I wouldn't go to a platform to take money. And therefore, I much prefer business loans where I know the bank is not giving business loans at 3.5%. They're giving at much higher rates. So I know that for businesses that are good businesses, this is attractive. Whereas for individuals, my personal feeling was it was less attractive. That's how I assessed it and how I assessed the risks. What are the possible scenarios that would cause you really not to be able to get your money out? Okay, so I mentioned that if other people aren't going to the loans, and I'm going to read the question here. It feels like a Ponzi scheme pyramid thing. It is not. So first of all, it's under Reshut L'Shuk HaHon. You're no messing around here. Second of all, if I come to you and say, listen, I lent Sarah 100 shekel. I need the money. Can you lend her the money now? And you feel she's a good person to lend money to, then you could do it. It's not one under the other. I'm out. You're in, okay? It goes like back into the pool of loans, and every day they sort of readjust all the loans. You have different amounts. New people came in. It adjusts slightly. So it goes back into the pool of loans if I pull out. It's not a pyramid thing. It's not. It's a sell. It's the same at the bank, okay? I took my money out the bank, so they can't lend it to Joe, so now they are taking your money instead of my money and lending it. It's a replacement. It's not a pyramid. It's not one on top of the other. And the whole idea of needing other people to buy in, well, that's smart, because let's say it's the stock market, okay, and you have a bond, okay, you have the Bank Hapoalim, Bank Mizrahi, let's say Bank Mizrahi bond on the stock market. You want to sell it today. You can only sell it. You can only sell a bond on the stock market if somebody else comes in and buys it. So you see that on the stock market, if you follow the stock market, there are always buyers and sellers. But let's take an extreme scenario. An extreme scenario would be 9/11, okay? 9/11. The stock market closed, so that means you couldn't take out your money. That's a really, really extreme case. So I'm just saying that only in extreme cases when there's really no buyers is there the likelihood that you couldn't get out. But I had to say that to you because I want you to understand, if you're going into this, what the risks are. And, you know, that is very important to understand, that on an extreme case, that would be your case of not being able to pull your money out. And then you just wait for the loans to pay off. It's not like they're gone, but, you know, that's sort of where the risk is. I'm not an American tax advisor, so the question about why would this not be a PFIC, I don't know. I do know, as I said, that I have American clients who went for this. They checked with their CPA before doing it, and all the CPAs said it's absolutely fine. So check with your CPA. The management fee is 0.5% per year on the money you have, and they take it monthly. That's how they charge it. I just want to summarize. I've explained to you what platform I work with. I've explained to you why there are different platforms, and I just want to very quickly share. I work with BTB. You can see here the sites in English. I can send you a link if anyone's interested. The sign up at first is first name, last name, phone number, email, how you got here, If you'd like to say agent, that's fantastic. And then you do register. What they do now, what they do next is they send you a code. You use that code, put in a password. You'll need to put in the password twice, and then you're in their platform. When you're in their platform, I'll just see if I can show you it. Hashkaot. Okay, so you have the details here, everything as I said. Okay, the whole site's in English, and the whole platform that you would go into is in English, but this specific thing I don't think is in English yet. So I just want to show you, this is what it would look like. You would see that you put in, let's say, 326,649 shekels, so maybe put in less. The average interest rate is 6.85. This is what it looks like, obviously in English. What it could look like in 5 years if you keep investing, 455. And then it shows you all the different loans. Each loan has a loan number, and it shows you how many payments it's into. Okay, so it shows you every single loan, and you can take a look, and then it's got this nice little graph at the side where it shows you the breakdown. So it's a fairly easy platform to use. Yes, I am now an agent of this company. If you have any questions and sign up via me, I'm always there to help you with BTB, to answer anything. And I hope you take this education about lending platforms in general and about BTB specifically. If you have anything else you'd like to ask, please do. We're going to stop the webinar now because we said we were going to 2:15. I appreciate you taking the time to join us today. And really, if anyone has any more questions, then please get back to me, email me, be in touch with me, whatever it is, I'm here for you. If I find other things that I think are good, seriously good for Americans, that are for small amounts, then I will be more than happy to share them. We will do other webinars. This came up, I thought, hey, I'll share it with you to get people started. Anyway, thank you so much for joining us. We'll see you on the Living Financially Smarter group. I will share the link on the Facebook event now if anyone wants to even sign up and just look at the site. You don't need to commit to anything now, to take a look, and good luck. We'll speak soon.